please stop what you are doing for a moment. If you receive Social Security SSI or SSDI benefits, the next few minutes may help you avoid a financial scare that many Americans are currently experiencing right now. A newly implemented banking compliance policy has already taken effect, not next month, not sometime later this year, right now. And it has the potential to delay your benefit deposit by 24 to 72 hours without any prior notice to you. I'm Zayne, and welcome to Senior Security Updates, where we keep you informed about every change that could affect your money, your benefits, and your financial security. Today we are walking through exactly what you need to understand to safeguard your benefits and protect your peace of mind. Stay with me through this entire video, because the details in the second half are the ones most people overlook, and understanding them could make a meaningful difference for you. What this new banking rule actually is tonight, we are discussing an important shift in the financial system that directly affects millions of Americans who depend on federal benefits. If you rely on Social Security to cover housing costs, purchase groceries, or refill essential prescriptions, what we are about to explain is extremely important. This new banking rule is officially active. This is not a rumor spreading across social media. It represents a real adjustment to the compliance standards used by financial institutions throughout the country. Let me be completely direct with you from the beginning. This rule does not reduce your benefits. It does not change the formula used to determine your monthly payment. Your eligibility remains exactly the same as it was yesterday. However, and this is critically important, it changes the process of how and when your Social Security deposit appears inside your bank account. For many beneficiaries, the transition will happen smoothly without any noticeable difference. But for others, it may appear as a short delay, a temporary hold, or in rare situations, even a return deposit that must be reviewed before funds are released. Even a single 24-hour delay can feel overwhelming when you are managing a fixed monthly budget. Many of you understand exactly what that situation feels like. This shift is not coming directly from the Social Security Administration itself. Instead, it comes from updated banking requirements that instruct financial institutions to more carefully screen and verify incoming federal deposits, including SSI and SSDI payments. How your Social Security payment actually travels to your account. To understand why this updated banking rule is creating discussion across the country, we first need to understand how a Social Security payment actually travels from Washington, D.C. to your local bank account. Many beneficiaries assume the process is a simple direct transfer, that the Social Security Administration sends money straight into your account in one step. But the real process is considerably more complex. It involves several electronic layers working together. Here is how it actually works. The journey begins when the Social Security Administration sends large payment files to the U.S. Treasury several days before your scheduled payment date. After that, the Treasury distributes the funds through the Automated Clearinghouse Network, commonly referred to as the ACH system. Think of the ACH as the central highway used for electronic payments across the nation. Millions of financial transactions travel along this network every single day. Under the newly activated compliance rules, this digital highway now includes more security checkpoints than before. In the past, if the routing number and account number matched correctly, the deposit was typically processed immediately without additional scrutiny. It was simple and very fast. Now, however, the Treasury and the ACH network have added stronger verification layers specifically designed to detect attempts to redirect federal payments fraudulently. This means even if the Treasury sends your money exactly on time, your bank must now run automated identity and fraud checks before those funds appear in your available balance. For most individuals, this process happens within milliseconds during overnight processing, and you will notice absolutely nothing unusual. But for some beneficiaries, this additional security screening can create a short gap between the moment the funds reach the bank and the moment the money becomes visible in your account balance. The key point to understand is this: your money is not missing. Your money is simply sitting in what can be described as a high-security digital waiting room, while the bank confirms that everything is legitimate and that the funds are going to the correct person. Why banks are applying this extra caution? The reason for this additional layer of verification is the rapid and serious growth of benefit-related scams and identity theft. Over the past 2 years, criminals have developed increasingly sophisticated strategies targeting federal benefit recipients. Some attempt to impersonate beneficiaries and change direct deposit instructions in order to redirect payments into fraudulent accounts. The financial losses from these schemes have reached billions of dollars in targeted federal benefits. Because of that situation, federal authorities have strongly encouraged financial institutions to act as a final protective barrier against these crimes. This is where the additional verification comes from. Unfortunately, that caution can sometimes create temporary inconvenience for honest citizens like you. But the intention behind it is to protect your money, not to create obstacles. What the system is now looking for. Under these updated procedures, banks are not only reviewing account numbers, they are now analyzing behavioral patterns and account characteristics. Here are several specific things the system reviews. The bank verifies whether the name attached to the Social Security payment exactly matches the name listed on the bank account, including middle initials. The system checks whether the account was recently opened or recently modified. It examines whether there have been sudden changes regarding where the money should be deposited. And it reviews whether the account has an established history of receiving Treasury payments. If the bank's automated software detects even a small discrepancy, such as a missing middle initial, a nickname instead of a full legal name, or a recently opened account receiving its first federal deposit, it may trigger what is known as a review hold. During a review hold, which may last between 24 and 72 hours, the bank performs additional identity verification before releasing the funds. A review hold does not mean your benefits were canceled or reduced. It means the bank is performing a protective verification to ensure your money reaches the correct person rather than a fraudulent account. A real-world example. What this can look like. Let me walk you through a scenario that illustrates how these procedures may affect someone in real life. Consider a retiree who had used the same local credit union for many years. When that branch eventually closed, she switched her direct deposit to a larger national institution. About 3 weeks before her March benefit payment, she updated her direct deposit information through her online My Social Security account exactly as instructed. Her payment was scheduled for the second Wednesday of the month based on her birth date. On that morning, the Treasury sent the funds right on schedule. However, because this was the first federal deposit arriving in her new account, the bank's automated compliance filter classified it as higher risk. The system recognized a recently opened account with no previous history of Treasury payments suddenly receiving a substantial deposit. As a result, the system paused the transaction for identity confirmation. She checked her phone early that morning and did not see the payment. Immediately, she became worried. She feared her benefits might have been reduced or canceled. She spent most of the morning feeling anxious about upcoming bills. By the next afternoon, roughly 30 hours later, the bank completed its verification and released the full payment. Nothing had been deducted. Her benefits remained exactly the same. But that short delay felt extremely stressful. Her experience demonstrates how technical banking changes can create real emotional difficulty for ordinary people who depend on this income. What this rule does not mean. When conversations about new rules begin spreading, fear can fill the gaps in understanding quickly. So I want to be completely clear about what this banking update does not mean. It is not a secret reduction in benefits. It is not a change in eligibility rules. It does not restructure the Social Security program in any way. Retirement benefits are still calculated using the same lifetime earnings formulas. If you receive SSI, your benefit is still based on the same income limits used previously. If you receive SSDI, your eligibility continues to depend on your disability status and work credits. None of those fundamental structures have changed because of this banking update. This adjustment affects only the verification layer between the U.S. Treasury and your personal bank account. Think of it like installing a security gate at the entrance of a neighborhood. The gate may take a few extra seconds to open while identification is checked, but it does not change your home or your right to live there. Most people who have used the same account for years without any changes will likely never notice any difference at all. Their deposits will arrive exactly as they always have. Situations that may trigger a temporary review. While many beneficiaries will experience no change, certain circumstances now increase the likelihood of a temporary bank review. Here at Senior Security Updates, we want you to understand these so you can evaluate your own situation. Recent banking changes. If you opened a new checking account during the last 30 to 60 days or recently changed where your benefits are deposited, your first few payments may receive additional scrutiny. Banks consider newly connected accounts slightly higher risk until a consistent monthly pattern is established. Usually, after 2 or 3 successful deposits, the account is treated as normal. Name differences. This might seem like a minor detail, but automated systems treat it very seriously. If your Social Security record lists your full legal name including a middle initial, but your bank account uses a shortened version or a nickname, the software may request a manual verification. Even a missing suffix, such as junior or senior, can create enough discrepancy to briefly delay a deposit. Dormant accounts. If an account has not been used for several months and then suddenly receives a large federal payment, the fraud filter may pause the transaction temporarily to confirm the account has not been accessed without authorization. In simple terms, consistency helps your deposit move faster. When your banking information remains stable and your name records match exactly, the payment process typically moves smoothly through every checkpoint in the system. Joint accounts and representative pay arrangements. For people who share financial management responsibilities, this new rule introduces additional considerations worth understanding. If the main account holder is a spouse or family member rather than the Social Security beneficiary, the automated system may flag the deposit as a potential name mismatch. This situation can occur especially for SSI recipients who use a representative payee to manage funds on their behalf. These arrangements are completely legal and very common. However, automated systems do not fully understand family relationships. They only compare names between treasury files and internal bank records. If you use this type of account, your benefits will not disappear, but a short verification delay is possible. To reduce that possibility, consider contacting your bank and confirming how the account is coded internally. Make sure the beneficiary's Social Security number and legal name are correctly attached to the account record. A proactive phone call to the bank's customer service or compliance department can sometimes prevent confusion before it ever occurs. Understanding the Social Security payment calendar. Some confusion surrounding this rule comes simply from misunderstanding how the Social Security payment schedule works. Understanding your specific payment dates can help you distinguish a normal processing variation from a genuine problem. SSI payments typically arrive on the first day of the month. People who began receiving benefits before May 1997 generally receive payments on the third day of each month. For everyone else, payment dates are determined by birth date, arriving on the second, third, or fourth Wednesday of the month. When payment dates fall immediately after federal holidays, the Treasury sometimes releases funds slightly earlier to account for those holidays. However, banks under stricter screening procedures may use additional time to complete fraud verification checks. Because of this, your deposit might appear later in the day rather than early in the morning. In an environment where information spreads rapidly online, a few hours can cause unnecessary worry. Someone might assume their benefits are being frozen simply because their deposit arrived several hours later than usual. In reality, these small timing variations are often caused by routine banking processing combined with holiday scheduling, not by any problem with your account or your benefits. The Currency Transaction Report. What you need to know. While the new verification rule focuses on incoming benefit deposits, there is an older federal regulation that is currently being enforced more consistently than many people realize. This regulation is the Currency Transaction Report requirement, commonly referred to as a CTR. Under federal law, any cash transaction exceeding $10,000, including deposits, withdrawals, or transfers, must be reported by the bank to the government. Many people become nervous when they hear this. But a CTR is not a penalty, and it is not an accusation. It simply documents large cash movements within the financial system so that authorities can identify patterns of financial crime. For most honest citizens, a CTR is filed automatically by the bank and nothing further happens. Problems typically arise only when large deposits appear inconsistent with a person's reported income or financial history. Structuring, the mistake that creates real problems. There is one behavior that can unintentionally violate federal law, and it is important that every retiree understands it clearly. It is called structuring. Structuring occurs when someone intentionally divides a large transaction into smaller amounts, specifically to avoid the $10,000 reporting threshold. Here is an example. Suppose you receive $12,000 from a legitimate sale of personal property. Instead of depositing the entire amount at once, you deposit $6,000 one day and $6,000 a few days later, hoping to avoid a report. Even though the money is completely legitimate, the intentional division of the deposit may be interpreted as structuring under federal law. Modern banking software analyzes transaction patterns and can recognize the timing and apparent intent behind multiple related deposits. In some cases, penalties for structuring violations can reach $10,000 or more, even when the underlying funds were earned entirely legally. The safest approach is straightforward. If you have a large legitimate cash amount, deposit the entire amount in a single transaction and allow the bank to complete the required report. Transparency is far safer than attempting to avoid documentation. Two common situations where retirees create unintentional confusion. Let's walk through two practical examples that illustrate how honest retirees sometimes create documentation gaps without realizing it. Selling personal property for cash. Suppose you sell an RV or a vehicle for $18,000 in cash. If you split that deposit into two smaller amounts on different days, it may trigger structuring alerts. The better approach is to deposit the full amount in a single transaction and keep a signed bill of sale showing the buyer's name, the date of the sale, and the agreed price. That documentation explains exactly where the funds came from and resolves any questions immediately. Receiving a large family gift. Suppose a relative gives you $15,000 during a difficult period. Gifts are generally not taxable income for the person receiving them. However, without documentation, the deposit may appear unexplained in your banking records. A simple gift letter from the person who gave you the money, stating the amount and confirming it was a gift with no expectation of repayment, can quickly resolve any questions if they ever arise. The financial reporting system focuses on income rather than deposits. The key is simply being able to explain where significant funds came from when necessary. Clear documentation is your most effective protection. 5. Practical steps to protect yourself. Right now. Here at Senior Security Updates, Zayne and the team want to leave you with clear, actionable steps you can take immediately. First, confirm that the name on your bank account matches your Social Security record exactly, including middle initials, any suffixes, and correct spelling. Even minor discrepancies can cause delays. Second, if you receive a large amount of legitimate cash, deposit it in a single transaction rather than dividing it into smaller amounts across multiple days. Third, keep basic documentation for significant financial transactions. A signed bill of sale, a gift letter, or a simple written record of where funds came from can resolve questions quickly and cleanly. Fourth, maintain a small buffer in your account, even $100 to $200, so that a short verification delay does not interrupt your ability to pay scheduled bills. Fifth, if you use a joint account or a representative pay arrangement, contact your bank proactively to confirm that the account details are correctly recorded and that the beneficiary's information is accurately attached to the account. Most importantly, do not allow rumors or online panic to shape your expectations. Social Security benefits continue to be issued. The payment system continues functioning normally, with stronger protections now built in. Closing thoughts from Zayne at Senior Security Updates. You worked for many years to earn these benefits. You deserve to receive them with confidence and with a clear understanding of how the system around them actually works. The rules we covered today are designed to protect your money from the criminals who are actively trying to steal it. Understanding them means you will never mistake a routine security verification for a problem with your benefits. And following the simple steps we outlined means you are doing everything within your power to ensure your deposits arrive smoothly and your records stay clean. Knowledge is your best protection. And here at Senior Security Updates, making sure you have that knowledge is exactly what Zayne and the team are here for. If this video helped clarify something important for you today, please share it with someone in your life who receives Social Security benefits, a family member, a neighbor, or a friend who might be worried about these changes. Getting accurate information to the right people makes a real difference. And drop a comment below with any questions you have about your benefits or banking situation. Those questions shape what we cover next because Senior Security Updates exists to address exactly what matters most to you. This video is intended for general informational and educational purposes only. It does not constitute financial, legal, or banking advice. Please contact your financial institution or the Social Security Administration directly for information specific to your account and benefits. Thanks for watching. Stay informed, stay protected, and we will see you in the next one, right here on Senior Security Updates.